Hey, puppy trades. I wanted to do a video analysis update of the stock market. We'll talk about the usual suspects. I think we're going to, these are the stocks I'm planning on talking about. If there are more, that come to mind, I'll certainly pull them up. I said that I was going to be doing my videos on the monthly option expiration, which is a big one coming up on January 20th. But, I figured why not just update now? Usually I want to wait for me to be able to raise the strike prices on my straddles. And then once I raise the strike prices on my straddles, then I come on FinTwit, I talk a little smack, right? I haven't been able to raise the strike prices of my straddles yet, and that's for a good reason. But the next thing that I'm planning on doing is I currently own the the 9 put and the 8 call guts position. A long guts is when the call is $1 in the money and the put is $1 in the money. So, for example, I think I got that right. Both options are in the money, essentially, right? So, if a stock is trading at 8.50, a long guts would be the 9 put and the 8 call, right? So, I own the 9 put and the 8 call on the Metaverse ETF that expires for August 18th of 2023. The Metaverse ETF is at about 8 right now. If it goes up a little more, I want to buy the 10 put and the 9 call for that same August expiration. So that's the next thing that I'm planning to do. Nothing else has changed. So that's partially a good thing. As the calls become deeper and deeper in the money, um, they become more powerful to the upside, but also a larger percentage of that option is going to become intrinsic value. Okay, so this isn't an options video, but I haven't really I haven't really changed anything with my downside exposure. I still have an awful lot of these I'm never going to sell my covered call ETFs or my JEPI or any of that. I've actually been, even as we've been going up, buying some more XYLD and RYLD and RYLG, even the Russell 2000 small cap half right. So it's half covered calls, half exposure. So basically, a half right is, let's say someone owns 200 shares of QQQ, right? If someone owns 200 shares of QQQ and they're running the half right strategy, they're going to sell one at the money call that expires in 30 days, ideally at the beginning of a month. And so, because a call or one option controls 100 shares, half of those shares are going to be covered, right? So, a full covered call position, if someone owned 200 shares of QQQ, would be selling two at the money calls, right? That's the whole position being covered. So, if QQQ runs off, then all the shares are going to be called away. With the half right, only half the shares are going to be called away. So anyway, I buy QYLG, RYLG, XYLG, as well as the XYLD, RYLD, QYLD, and JEPI, and a lot of other dividend ETFs. So I have a lot of premium coming in to make sure that this is ideally a net credit where I'm getting more from the premium and the dividends and reinvesting them than I'm spending on the insurance. So anyway, um, I wanted to, that was a little long way of saying that I wanted to make a video that was just about charts. Anyway, you can't just make a video that's just about charts though, because the stock market isn't just about charts. I would say it's maybe 15% of it is looking at, a stock chart like this, real investing in finance, which is what I do, for myself, in, multiple accounts that I manage and a lot of assets that I manage. Um, you know, Speculation is just a part of it, but I will tell you guys what I think is going on in the market. Here's the S&P. I think this is a large wave one, subdivided into 1, 2, 3, 4, 5 waves, and an ABC correction that ended at the 50% retracement. So what the bulls are going to argue, and it's not normally a good idea to do this for, a daily chart on a YouTube channel or something like that. But what bulls are going to argue for a lot of, stocks is that from this low, we're forming a wave one and a wave two, and go time, right? That's, what the Elliott Wave bulls are going to argue. And that's not, always, or that's not ever a popular opinion. We'll talk about why it should be considered. But in the bigger picture, in the not daily chart, the bulls are pretty confidently going to say that if we're above 348.11, which right now SPY is just below 400, that's a large wave 2 that's ended. The length of wave 1 placed at the wave 2 low can take the S&P on a wave 3. The wave 3 target is found by taking the length of wave 1 and placing it at the wave 2 low. So that gives a target right now of about 610. Okay, so that's the wave 3 target. 610 sounds like a big number. It's only about 25-ish%, maybe a little more, maybe a little less, above this prior all-time high. So we'll talk about why, instead of just saying that could happen, why maybe, it's more expected to, with charts in other corners of the market, like industrials, like, I would say, I still think Enphase Energy and First Solar were pretty big leading indicators. And so far they have turned out to be, leading indicators, not for Tesla, unfortunately. I thought that Enphase Energy and Tesla and NIO all being the top holdings of QCLN meant that when Enphase, blasted off, that we would see Tesla and NIO and other small cap clean energy names follow. So far, we've only seen First Solar follow. But anyway, that's clean energy. We'll talk about why, we're starting to see, when I say we, I mean me as a bull. We're starting to see some evidence, and I didn't even really, we'll get back to Nvidia. We're starting to see a little bit of evidence in favor of the bullies. All right, this is Nike. It's a large wave 1 and a wave 2 at the 78.6% retracement. And we just talked about the idea that, SPY has formed a wave 1 and a wave 2 from this low. Well, Nike formed that same wave 1 and wave 2 and has entered a wave 3. Starbucks has also done a very similar thing, right? The same kind of, hey, is this a wave 1 and wave 2 from this low? Well, Starbucks has said, yeah, that is, and this is at least 5 waves for Starbucks. Anyway, the point is, if we look across the market, even just not counting about stocks that are at all-time highs, which there are, they're not popular ones, but there are stocks at all-time highs that are in important sectors like consumer discretionary, consumer, staples, TJX, Conagra brands, right? They're there, and for industrials, we just saw Caterpillar, which is the 4% holding of XLI, break to a new all-time high. This is JP Morgan. I mean, this is, but this is the same for SPY, hey, is this a wave 1 and a wave 2? JP Morgan suggests, or has kind of already shown it is, right? So if JP Morgan or Starbucks or Nike are above this all-time high, that doesn't really mean much to classical traders, right? It doesn't really mean much to fundamental traders that Caterpillar is at an all-time high. Why does it matter for Elliott Wave theorists? Well, for Elliott Wave theorists, the bears are all saying that this is an ABC, that this correction's not done, right? That this isn't ABC, this is A, B, C, and this correction isn't complete, right? So Caterpillar has already kind of disproven this by breaking to an all-time high. The point is, in the future, we could see more names, right? Like XLI, like, Starbucks, JP Morgan, and Nike, for example. There are stocks that have already kind of broken this all-time high and kind of already shown, hey, wait a minute, at least in a stock that's very correlated with the market, the correction in that sector has ended, right? Can I tell my broker that? No, I can't, right? So that's why I talk so much about the covered call ETFs, and I talk so much about, the straddles and, the in the money puts and the guts positions, and because that's important. It's more important, than this. And a lot of the portfolio, a lot of the best holdings that I bought recently, like, Simon Property Group and US Bank and Verizon and, Starbucks, they were also dividend growth holdings, right? So, there is a little bit of a correlation and a causation possibly to, those stocks doing particularly well. Anyway, the point is, I have a lot of income coming in, so I can wait and be a long-term investor and, allow these wave counts to play out. Being a long-term investor really gets clowned because, a lot of people don't have time to be a long-term investor. They have bills they need to pay that month, right? And so that's why, the bigger money is able to have such a huge advantage because they have so much more time, right? Consider this, XYLD is yielding about 13% right now. And I know AG&C, a mortgage-backed REIT, it's, for a special fundamental reason, AG&C is a mortgage-backed REIT who the interest payments and the principal are backed by a government institution. So yeah, the dividend can get cut, but the idea is that it's pretty stable, right? So XYLD and AG&C are both yielding 13%. One's a covered call ETF. One's, a mortgage-backed security REIT, where the interest and the, principal is backed by the government, right? So let's just assume the 13% yield is sustained. And let's assume that a large institutional investor is planning on, reinvesting the dividends and, averaging in to, either one of those 13% holdings. Well, paying a 13% dividend means that after about, 7 to 8 years, the investments pay for themselves. And so then year 9, year 10, year on and on, right? Every, after the 8-year mark, after the 9-year mark, the investment's already paid for itself. And so it's just, that's the type of advantage that a long-term investor has, right? But without the income coming in, there's bills to pay, right? So anyway, that's a little bit of a spiel about how when people say, time in the market versus timing the market, there is a little math behind that. But without income coming in, without the dividend holdings, without the covered call ETFs, the math can very much go against an investor as well. So anyway, here is Nvidia. I think this is a large wave 1, subdivided into 1, 2, 3, 4, 5 waves. This is an ABC correction that I believe ended at the 61.8% retracement, and it's another one where possibly in the semiconductor sector now we could see, hey, yeah, that is a wave 1 and a wave 2, and Nvidia can enter wave 3 of wave 3. So the absurdly tight, an absurdly tight level would be that kind of daily low, right? The larger invalidation is still going to be this, wave 2 low of 108.13. So instead of just raising the stops, what I'm going to do as the market, progresses higher is I'm going to raise the strike prices on my straddles, right? So I'm going to raise, my straddle strike prices on AT&T and AG&C and ET in the value sector, and the metaverse ETF and the gambling ETF bets in the growth sector. And I also have, other possible candidates that I could, look for long gamma positions. But anyway, that's my plan. I'm not going to be, raising a stop loss. I'm going to be raising the strike prices on, my straddles and buying, straddles that are, let's say a stock's at, 16, I'll buy the 17 straddle where the put's a little more in the money, because I really care more about the downside exposure. Anyway, so this is Nvidia. I think this is a wave 1 and a wave 2. If this low holds, yeah, wave 3 has entered in the larger degree. And the bulls are also going to say, did Nvidia and AMD enter wave 2 on the daily chart as well? We'll see. That is my bias, though. So here is AMD, the sister of Nvidia, and they look very similar. If we look at the long-term charts, I'll have to move these fibs very carefully, but I do believe that AMD formed a long-term wave 1 as well, subdivided into 1, 2, 3, 4, 5 waves, ends in ABC correction at the 61.8% retracement, and then it's not a good idea, for TA gurus to, zoom in on the daily chart like this, but this is what the bulls are going to say. That was 1, 2, 3, 4, 5 waves up on the daily. That's wave 2. Wave 3's begun. Okay, so that's a little cute, but above 54.57, I think that's a useful long-term wave 2 low for the bulls to, define risk against. So here are the emerging markets, EEM. I have other emerging markets to talk about later in the video. I think this is kind of, one correlated with the market, though. If this really is going to be moving with China, and other parts of Asia, this could be huge. And I think that, other parts of Asia agree. Now, China's had a big move up, recently. And that's kind of the problem with making videos about, being a bull when you go up 40 or 50% or 60% from a low, right? Because the second, there's a pullback, it's like, bag holder this. But to me, it's not about being a bag holder. I'm just going to be raising the strike prices of these straddles and collecting this premium. So I have all these covered call ETFs, right? So if we do kind of pull back and consolidate, I basically just sold a bunch of at the money calls that are going to go worthless through ETFs. Anyway, where was I? Emerging markets ETF. They're going to say these are just, a bunch of 1-2s and 1-2s. But the only 1-2 that really matters for risk purposes is that from this low, this is a wave 1 and a wave 2. That ends at the 78.6% fib. It's a little wide given the recent, kind of thrust, but above 30.09, very useful in validation to say that's a wave 1 and a wave 2. A wave 3 to new all-time highs can begin, and it lines up with the Hong Seng and other parts of China. That basically the idea is that, hey, that's a 2007 high, right? And, the United States of America, indices, the NASDAQ and the S&P, they form that same high and they explode past it. The idea is that now we could see the emerging markets in a lot of, even, Europe kind of looks like this. A lot of the European indices kind of look like this, 10, 15-year base. Could we see the rest of the world in the long term, follow what America did, above the 2007, 2008 high? That's the upside risk. The downside risk right now is 30.09 for EM. I like it to the upside. Here is XLF. Talked about JP Morgan a little bit. But this is it's very, it's all over the market. And with, Caterpillar and maybe soon XLI and Honeywell, now we're not just talking about Enphase Energy and First Solar. We're talking about holdings of XLI, holdings of the S&P, that the bears are saying, hey, yeah, they ended, this ABC correction isn't done. The more and more holdings of indices and sector ETFs that are at all-time highs, at least for the Elliott wave theorists, they have to reconcile that. And they're going to have to start calling these expanded flats. In Elliott wave theory, you don't want to be the person calling for an expanded flat unless you are really, really good at what you're doing. Anyway, this is a large wave 1, 2, 3, 4, 5 waves up, an ABC correction. It's the same song. It's the second verse above 29.59. The bulls are going to say a long-term wave 2's ended. And the cheeky, crazy gurus who don't care about being called bag holders, they're going to zoom in on the daily chart and they're going to say that's a wave 1 and a wave 2 as well. And just let's talk about this RSI for a little bit. 1, 2, and we have this big, this big highest reading for this wave 3 on the weekly chart. We consolidate for a little bit, and then we have this wave 5 higher that ends with momentum divergence. And this, wave 5 looks like it's subdivided into 1, 2, 3, 4, 5 smaller waves. Looks, like a clean impulse to me. Can I tell any of that to Ally Invest? No. I don't talk about Elliott Wave with Ally Invest, but that would be an interesting conversation, because we don't have much to talk about because I don't trade on margin. Anyway, we'll talk about taxes soon. This is JP Morgan. I already talked about JP Morgan. We're done with JP Morgan. I bought US Bank though. So US Bank, the Vikings play at US Bank Stadium. That's why I bought this stock. Just kidding. Skull, though. The Vikings, man. Is Kirk Cousins going to do it? Probably not. I think this is a large wave one. 1, 2, 3, 4, 5 waves up and a wave two. I think this is another wave one and another wave two. Let me talk about my fundamentals for a little bit. I am a fundamental. I'm just kidding. I'm not the fundamental guy, but it annoys me seeing, people on FinTwit, act like they know fundamentals. So I think I'm going to learn them. We look over here. We have all these beautiful dividend payments that have grown very consistently for a very long time. And we're talking about since 2009, this company's grown its dividend. It's got a 40% payout ratio. When I bought it, it was almost yielding, 4.5%, 5%. Anyway, so basically, if it's above a 20% payout ratio, the general rule of thumb is that dividend is sustained. Ideally, the dividend is growing, and ideally, it's sustained, and that should be a sign that, the dividend's going to grow in the future, right? So dividends can get cut, but I don't want to have all my income coming from covered call ETFs because premium can fluctuate. Premium just got really cheap. Implied volatility rank and percentile for a lot of the sector ETFs is damn near close to zero across the board. So I want to have income coming from other ways. If we look at Verizon Communications, this is another kind of example of a dividend. What I'm looking for from the growth perspective, we've got all these years of dividend growth going back to the 80s. So that's a long time, right? The 80s. That must have been wild. But Verizon's been paying a growing dividend since the 80s, and it has a 48% payout ratio now, yielding 6 to 7%, suggesting that's a healthy dividend, and it should be sustained anyway. Wanted to talk about fundamentals for 5 minutes, which is never a good idea for an Elliott wave theorist with a YouTube channel, but what do I care? Anyway, this is a large wave one, subdivided into 1, 2, 3, 4, 5 waves for Royal Caribbean. Look at this RSI right here. So let's talk about this little rule. Wave one and wave two. All right, we see wave one and wave two on the RSI, right? We can see this. Wave one, wave two, wave one, wave two. Wave three makes this big, beautiful thrust, and it's the highest reading on the monthly RSI. We have this wave four correction that we can see. And then wave five ends with momentum divergence. That's the classic 1, 2, 3, 4, 5 waves up. Now 3 waves back. Can't tell this to how I invest, but from an Elliott wave theory perspective, we're looking for 1, 2, 3, 4, 5 waves up for Royal Caribbean. This is sillily tight. Sillily wide of an invalidation, but I just think that we're getting to a point now where some of these charts that aren't necessarily the best lows to trade against, they're important evidence. I mean, look at this. This is at least 1, 2, 3, 4, 5 waves from the low. I think it's 1, 2, 1, 2, wave 3 from the low. Anyway, that's getting a little cute. But now we're starting to go shift from opportunity to evidence in the market. And it's a little fun. For me, I get to just raise my strike prices until we get to some of these equal legs targets. It sounded silly, a little bit ago, right? And it's definitely not time for victory laps. And I think anyone who cares about victory laps, they're not going to be, they're in it for entertainment, to be honest. I have lots and lots and lots of covered call ETFs, and my biggest focus right now is raising the strike prices on my straddles as the calls get more deeper and deeper in the money, getting a little more delta neutral so I can go talk a little smack. But I can't talk smack until I raise my strike prices. Anyway, here's pin 1, 2, 3, 4, 5 waves up, wave one and wave two on the all-time chart. I think this is another wave one and another wave two. It's a little, it sounds crazy, and to be honest, 25.49 is a little tight for this ridiculously high beta. But I'm looking for this is a wave one and a wave two. 25.49 is a little silly tight, but I do think we're going to see pin enter a wave three. So, nice opportunity. the stops, this is why I use straddles on the growth ETFs and position size to manage risk with these high beta stocks, and have lots of covered call ETFs, because 25.49 is a little tight for a stock whose beta, let's just check, is what, 2.18, right? So this is more than twice as volatile as the S&P. That means it has less than half the position size of a kind of, a holding that has a beta of 1, if position size is being done based on beta. Anyway, I also own the 15 strike straddle on the BETS ETF that expires for that April expiration, by the way. Here's Delta Airlines. The airlines are in the news recently. You can't go anywhere. Is it just me? Can you guys go anywhere without hearing someone on their phone talking about how their flight got canceled? I mean, that can't just be me. But anyway, Delta Airlines, their systems are down or something. All these, people, they're like, oh, I bought my tickets. I have my confirmation email, but they can't access their tickets. Anyway, or maybe it was just 2 people I overheard on the phone. I'm a little bit of an eavesdropper, but. Delta Airlines, another 1, 2, 3, 4, 5 waves up on the RSI. 1, 2, wave 3 is that big RSI thrust. Wave 4, wave 5 ends with divergence. That's 5 waves up. An ABC correction for wave 2. So this is a large wave 1 and a wave 2. The idea is that a large wave 3 has begun. The wave 3 is subdivided into 1, 2, 3, 4, 5 waves. 24, but we're getting, some of the stops are getting a little wide, right? And that's kind of, the issue with, talking about some of the stocks is because they've, thrusted up a little bit. Real quick, we've seen, not exaggerating, there are stocks in important sectors, up 60, 70% from lows. Let me talk about a few. Let me just go off script for a little bit. You guys know what I think about Delta Airlines. That wave 2 weekly low of, I think, 27-ish is not a bad level for Delta Airlines, for an invalidation that wave 2 is already ended. But look at Deutsche Bank, man. Look at this. I mean, there's a little bit of, evidence in parts of the world. Deutsche Bank, 1, 2, 3, 4, 5 waves up. ABC correction. Looks like a large wave 2's begun. And a lot of the Europe charts look like this. This is what a lot of European ETFs look like. This is what the DAX looks like. It's not just going to be Caterpillar, right? And once it's not just Caterpillar, once it's not just, and already, I mean, TJX, Conagra Brands, CAG, Caterpillar, First Solar, Enphase Energy, they've already said the correction's done from an Elliott Wave perspective. Now we're even looking at charts of stocks that went all the way to the 61 to 78.6% retracement and asking, are we about to see wave 1 highs break for them? That's, Boeing, right? Is Boeing about to go get above this high of 278.57? From an Elliott Wave perspective, that would be, a pretty big piece of evidence. And we already have Caterpillar, and soon we could have, I'm pretty sure I pulled XLI up, but what if an entire sector ETF? Is it look at this. This is a sector ETF. Isn't this like what, 14% of SPY? That is $5. What is that? 4%, 3% from breaking this wave 1 high. So for classical traders, for fundamental traders, that doesn't matter. For Elliott Wave theorists, it does matter, because all the bears are saying that this is an ABC correction that hasn't ended yet, right? And so we got Caterpillar up here, we got Honeywell possibly up here soon, and if you're following the right people, they may not be sexy stocks, but there's stocks up here already, right? It's not something I can tell my broker, but in Elliott Wave, that's that's the evidence, right? And so there's opportunity and there's evidence. There was an opportunity, the ABC corrections were opportunities, and now we're starting to see some of these charts say the ABC correction's over. The evidence phase, and even, possibly even soon, profit taking phases could be underway. That's, a little bit away. I want to be able to raise the strike prices on my straddles before we get to, any type of profit taking action. But anyway, I think we're going to see, more and more, not just XLI holdings, but, we're going to see some evidence that these ABC corrections are done. Disney, we're a little far away from that. But on the long-term chart, this is a 1, 2, 3, 4, 5 waves up, large wave 1 and wave 2. And the bulls are going to say, hey, wait a minute, we haven't broken this wave 1 low yet. We almost did. We got a little close, but we haven't yet. And so since we haven't, above 79.07, this is a wave 1 and a wave 2. And did Disney enter, wave 3 of wave 3? And a stock like this, entering wave 3 of wave 3, they are going to make that difficult. They aren't going to make, that's not going to be a fun one, right? This is a bag holder one. This is a, but the ones that they call you the bag holder on, in my experience, those are the ones that, end up being worth it the most, especially in kind of that growth, world. Anyway, here's Simon Property Group. Wanted to get a REIT, and here I own this REIT. I think it's a 1, 2, 3, 4, 5 waves up, an ABC correction at the 61.8% retracement. Now it's getting a little wide, but, we could see one of, these big real estate names, above this wave 1 high. So we got a little bit of work to do in the real estate world, but I wanted to cover this because it is important, and it's a lot of what I've been investing in the fourth quarter were real estate stocks. AG&C, I'm playing with straddles right now. I have the 10 straddle for January 2024 still, but I think we could see this idea that rising rates or a higher rate environment just kills the real estate sector may not play out. 6.25 is getting sillily wide. Sillily is a word I'm never going to try to say in a YouTube video again. I should probably not try to say soliloquy either, but for some reason that's a little easier than sillily. Anyway, this is AG&C. 7.30 is going to say that the wave 2 is already ended with Simon Property Group. Wanted to get some real estate coverage in. That we could see a wave 3 enter in this sector. Here's SLV, silver, starting to get a little fun in this sector. A large wave 1 and wave 2. If I take the Andrews pitchfork, connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, there's a long-term wave 3 target at this pitchfork median. I think from this low, this is a wave 1 and a wave 2 at the 61.8 to 78.6% fib. Once again, a little wide, a little bit of a thrust that we've had, but above 16.19, wave 2's ended. A wave 3 to, at minimum, the equal legs target of 33. 38 is that 161.8% extension target for SLV. Wheat and precious metals. Sorry, I don't have this chart ready. Or do I? No, I don't think I do. Anyway, this is wheat and precious metals. There's a few ways to look at this. One is that this is the most important for me is that this is a wave 1 and a wave 2. If I connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, I believe in the long term, this bold black wave 3 is going to end at the pitchfork median. How this is subdivided could be a few ways. One is that this is a wave 1 and a wave 2, and a large wave 3 has begun. I think more accurately is probably something like this, where this is a large wave 1 and this is a wave 2 that's ended, and we've entered wave 3 of wave 3. I do like this as a pitchfork. I thought I had this chart a little more ready, but anyway, this is another way to view it, is that it's wave 3 in progress, and that this was all 1, 2, 3, 4, 5 waves up for wave 1. This is wave 2, and wave 3 of wave 3 has begun. What's most important for me for wheat and precious metals is that this is a wave 1 and a wave 2, and I think that this is going to be a nice target for the long term, the median of this pitchfork. I have another pitchfork I really like for EWY. We'll talk about Tesla for solar and NEO first. So I'm holding Tesla. I'm not going to stop out. I'm going to use my my risk management tools for most of growth, and position size, including position sizing based on beta, my large allocation to cover call ETFs, and my straddles on not just value stocks like AT&T, AG&C, and ET, but the Metaverse ETF and bets. So I'm not going to stop out for Tesla or any of my growth stocks. I manage that risk with position size and the aforementioned tools. But I think that this is a large wave 1 that's developed in the long term. This is 1, 2, 3, 4, 5 waves up for wave 1. And this is a wave 2 where between the 61.8 to 78.6% fib, 79.98 is, a really tight level for a stock that's at 122 and has a very high beta. But that is the 78.6% fib. It's a pretty useful level. I use position size and straddles, particularly on the Metaverse ETF right now. My favorite kind of vehicle for getting downside exposure and upside exposure to kind of tech and growth. But anyway, what some Elliott wave theorists are going to say is that when a stock doesn't have a low, that's important to trade against, I think the 78.6% fib is a pretty useful level. They'll say, wait for this, a wave 1 to develop, and then once 1, 2, 3, 4, 5 waves up for wave 1 develops, by the wave 2 for waves 3 of wave 3 to the upside. So, doing that, that's just, there's nothing wrong with that. That's, that's just going to end up leading to a lot of stop outs if someone says they're always going to do that. I just like to say, Elliott wave is great, but there is a part of it where, I'm just understanding this wave C is going to be ugly and it's not going to be fun. A wave C like Alibaba's, where it's a high beta growth stock, they're not fun, right? They're going to make those difficult. They're going to make, even the ones that I slaughter, they make difficult, right? Even the times the Tesla and Bitcoin went really well, those were real difficult too. They make the opportunities difficult. So for me, I manage that with position size and having infinite downside exposure to growth ETFs like the Metaverse ETF and bets. I think this is a large wave 1 and a wave 2. 79.98 is a little tight, but it's a 78.6% fib. And we can see Tesla begin a long-term wave 3. We didn't, or at least not for now. I thought that if we saw First Solar and Enphase Energy explode, that was going to be a bad time to, short Tesla and NEO. Ended up being a good pair trade for those smart enough to figure that one out. But I think that, we have seen evidence that stocks like First Solar, stocks like Enphase Energy have entered long-term bulls. Do I like chasing First Solar at 180, which is literally the wave 3 target? No, I don't. But this is as much evidence as possible in Elliott wave that this is a multi-year base breakout for First Solar. And Enphase Energy, it's the same thing, right? So, is correlation analysis dead? Is it just completely useless? I don't know. I'm still going to use it. I think a lot of people are going to give up on it after 2022, and that's kind of, that's why I diversify. That's why when a sector is not popular, like oil wasn't popular, like, there were times even big tech wasn't popular, if you can believe that. That's when the correction's ending. That's when, not always, but, from an Elliott wave perspective, that's when, I'm looking for a wave C, that's ending, when that's who would own this sector? It's the one sector that's been down. We saw the whole market. And then, China was just a bloodbath, and then that's, a few weeks of that. No retail traders are going to be in China, right? And then we have evidence that MMs are, they have straddles that they bought. So they have these deep in the money puts, and they can buy as many shares of Neo and Alibaba and, XPEV and Lee that they want, right, against these in the money puts for these straddles, while retail traders are getting called bag holders and or worse, people are shorting these, and that's just their game, right? And without that downside exposure, without that premium coming in, people do have to worry about being called bag holders. Luckily, I don't. I think this is a large wave one and a wave two at the 78.6% fib. For Neo, there is not a useful level to be above. I mean, 8.38 for a stock that's at 11.80, that's a little silly tight for Neo. But if we look around, we're starting to at least see some evidence from China. Alibaba maybe supporting the idea that this was all a big wave one. This was the, it certainly felt like a super cycle wave two for China. And now we can see a period of dominance in a foreign market. NetEase I talk about very frequently. But, if we look at Alibaba, maybe a little bit of an impulse forming from this low certainly would fit the description of a wave one and a wave two and then an explosive wave three. So that should be, hopefully, a little bit of evidence for Neo. Anyway, we also have an ETF for South Korea, EWY. I kind of like this. In the long term, I think this is a large wave one and a wave two. So it's another one where I'm looking for the median of this Andrews Pitchfork, just like wheat and precious metals, to act as a long-term bold black wave three target. I think that from this low, this is another wave one and another wave two. And then from the 2020 low, a smaller wave one and another wave two. So I am looking for a wave three of wave three to begin. We have gotten quite far. Well, 47.19 would say wave two is already ended for EWY. But I wanted to get another Asian market in there. We have, like EEM, there is this kind of foreign opportunity. And that's not wordplay. It really is a foreign opportunity. But it's also a foreign opportunity in the sense that we're not, from, the chart perspective, it's my opinion that as far as country's index is concerned, we may not have seen an opportunity like this in foreign markets since the American markets ended their 2009 correction. All right, I understand that's, a little grandiose, but I think for the emerging markets and, South Korea and China, from an Elliott Wave perspective, it could be 15 years in the making. Anyway, here is ROKU. I talked about Disney. I think Disney's a little bit of evidence. I haven't, Netflix has had a little bit of a rally anyway, as the market had been, crashing, so to speak. I did have to pick which stocks I was going to, make sure I was quantifying risk with that were the most useful. For ROKU, still not very useful levels. 26.30 is quite wide. We went below this low of 58.22. It's another, one of these ARC holdings. It's almost like Neo, where we're past the 78.6% fib. The real invalidations are quite wide, but I do think this is 1, 2, 3, 4, 5 waves up. Wave one and wave two, a large wave three could possibly even if the risk reward were, $50 to the downside, or, if I look at, this stop right here, 26.30, $25 to the downside, and then this all-time high is 490. I know that sounds kind of silly, but from a risk reward perspective, in all reality, I do think, I'm almost positive Roku's on the screener right now. Where are you, Roku? I swore I saw you. They're on the strangle screener. But anyway, here's proof. There. Come on. No, I swear I saw Roku on this. No, they're not doing this to me now. Not at the end of the video. Roku's been on the straddle and strangle screener. All right, does that guarantee Roku's going to go to the moon? No, it definitely doesn't. What it does suggest, or what it proves, is that institutions do use strangles and straddles to quantify, to manage risk, and not just to do that, but to accumulate these stocks. So they'll have a straddle, like let's say for Roku, they buy straddles when Roku's at 100, and then Roku falls to 50, while Roku, retail investors are stopping out and, getting laughed at or whatever. They have these, 100 strike puts that are deep in the money, and they can buy as many shares of Roku as they want to offset, that bearishness, up to 100 shares per put. So that's how they accumulate these stocks and get them while retail stops out. Square Cash, 293.23, 289.23. Okay, so Square Cash, I think it's another one in growth world. Wave 1 and Wave 2. This is another Wave 1 and another Wave 2. And a Wave 3 of Wave 3 could begin. It could happen. 51.45, not a bad level, to say, hey, Wave 2's already ended. Wave 3 of Wave 3 is going to begin. That's kind of silly, right? That's kind of silly. It couldn't be different this time, and I'm sure it's not, but, we look at some other eCash related names. Wave 1, Wave 2, Wave 3 from a low, possibly beginning Wave 1, Wave 2, Wave 3 in the all-time picture for Bitcoin, possibly. I thought that I had picked Ethereum over Bitcoin. But anyway, I don't want to be that guy who talks about Bitcoin when it's all, up like this or whatever. But Wave 1, Wave 2, Wave 3? Maybe. 1, 2, 3, 4, 5 waves up, Wave 1. ABC, Wave 2. Between the 61.8 and 78.6% fib, Wave 3. I think above the 78.6% fib of 14.8. Not bad RR. I'm not going to go chase Bitcoin right here, but it is going to be important evidence, most likely, for other eCash names, possibly even other growth names. So it's a little interesting to me. Here is Ethereum. If we look at crypto, what the bulls are going to say is they're going to look at this Ethereum chart a lot. And they're going to say, is this 1, 2, 3, 4, 5 waves up for Wave 1? 1, 2, 3, 4, 5 waves up, Wave 1. ABC correction, Wave 2. Large Wave 3 beginning? Maybe. And on the long term, that would fit in with the idea that this is a 1, 2, 3, 4, 5 waves up, large Wave 1. This is an ABC correction, Wave 2, between the 61.8 and 78.6% fib, and a Wave 3 of Wave 3 could begin. Where in the big picture, maybe this is the Tom Brady, Larry David low. Maybe.